Hey everyone. Since things are getting a bit interesting, I thought I'd do another update and tell you how I see things. And we have US 500. We have the yearly ATR levels. We got rejected by the long trigger and went below the yearly open. And now things are looking quite dicey. On on the other hand, when looking at mega caps, things are pretty shit. Like breakdown. Uh, Breakdown for a while and acceleration down like this. Nvidia is trying to make the neckline for the head and shoulders with a potential breakdown as well. Google also looking like to break down below the rising trend line. Amazon rejected again here, then here, and we look at weekly, we're gonna see this, or the monthly, we're gonna see this nasty week here and another rejection and looking quite negative as well. Microsoft had that short call roll in the flow today and still has this double top target to go to 435 and potentially lower. Meta almost retesting the lows here. Netflix with the earning reaction and going down quite heavily, almost 8% now. I overlapped this part here onto this, and based on that is giving us a target of around 70, and I think we will actually hit it. Broadcom, bear flag breakdown and potentially going to 300 here. Palantir also barely breaking down. MicroStrategy almost at new lows. TSM, this one was fine but got rejected as well. Oracle threatening new lows, and so on. And on top of this, we have stuff like Adobe accelerating down somehow, now doing the same. So basically software. DDoG, like these things have fallen a lot, and instead of bouncing, which is the natural thing to do in this scenario, just from getting super oversold, they're accelerating down. This combined with the Netflix reaction to me screams that the algos are set to sell no matter what. Like basically sell first, look at what happened later. It doesn't really matter what the earnings are going to be unless they're spectacular for some reason. But basically not just Netflix, JPM last week, which had very good earnings in my opinion, uh, and banks in general, but they get sold off very heavily due to that. And even JPM is like on the brink of breakdown here as well. So we have a bunch of stuff that looks quite negative. The market is was broadening out, but now it's worse. Like for example, on Friday we had industrials and all everything here was green basically. Utilities was also green. Now industrials have turned. Semis was broader, like we had aside from AMD, MUN, ENTS, Intel, we had also Lam Research, we had a Mod Clock, and a few other names. But now everything seems to be breaking down. And the only safe havens left are gold and silver, or metal names, and a few of the semi names like memory and consumer defensive, which also was greener on Friday. So even this is getting a bit hit. So we have fewer and fewer things holding the market up. When silver and gold and stuff like Micron turn, they will not correct slowly and slightly. And as breadth becomes worse and worse, things will turn this as well. And when this turn completely, we will get a limit down move at some point, I think. Now, looking at it, let's do another comparisons. First of all, we could have gone up for a while longer, but since we had a catalyst for the Trump Greenland thing, now things are shaky and we are back here. It's very similar setup to what happened last year. The only difference is now it's happening in January. Last year it held on until February. If we overlap them, they look near identical. And since it was also a macro event, this will also be a macro event and requires a macro solution. We have algo selling everything, and how I see this playing out is basically, oh, actually, what I drew here. Uh, we get a move down to the short trigger on the year. This is also the number one, not number one trade. It was something else. Oh, the weekly 21 EMA. So we had the 21 EMA test here. We will get another one here uh, at 6700, and I think after that we will get a bounce to retest the yearly open. Basically, we go down here to 6700. We get a bounce to retest the 55 EMA and the yearly open somewhere between 6800 and 6850. And then because algos are set to sell, I think when earnings come in next week for mega caps and they begin, we get another sell-off, and we go from here to here. Now, then it's about macro. Like if we get the escalation, we could potentially see a bounce, and we bounce, we get here, and that's it. If we do not see the escalation and instead we see escalation, which I think will happen, because the EU moves slowly, and they said they will not move until Trump enacts the tariffs. Trump said the tariffs are coming in on February 1st. So basically, this is the week of escalation, and I think the Europe will escalate in this area, in this range. Time frame here, and then the market will do another the leg up. So we go down, we go up. This is where to go short if you want to go short, in my opinion. And from mega cap earnings next week, we go back to the lows here at 6700. And from the escalation on the European side, once the new tariffs kick in, we will see the second leg down to 6500. Then again, we have an automatic bounce. Maybe we go back to the 6700 level. And if we still do not get the escalation, maybe we even go to 6300 later on. But basically something like this as well, but only smaller. Now I was looking at crypto as well, and why I think this makes sense potentially, and it could even be worse than I thought, is for crypto I had four scenarios based on previous behaviors at lows. So basically took the bar patterns and put them, overlaid them, and we have this one, which is clearly not the one that happened. Then we have this one, which again is clearly not the one that happened, but because of this could have been the pattern, the main one. But we got to this point, and instead of going up like we did here, we went down and it's no longer valid. And then we had this one, which is also not valid because it's too different. So the only one that is left is this one, which is nearly a perfect match for what is happening right now. I just made it a bit narrow, so it's happening a bit faster than before. This is what it looked like, something like this without that. And it shows a prolonged bear market. Also have the ATR levels on this one as well, and you can see that we are back at the yearly open. And assuming another leg down in equities, if we will get basically exactly what is drawn here and go down on Bitcoin as well, first to 80k, and then if we get further escalation to 67k here. But the problem is that this one happened due to the bear market that we got in 2022. So basically the second leg down here, this was January until April, and then April until December was because of the bear market that we had in global equities. So this only seems realistic if we get a bear market for US for equities in general, which at the moment doesn't seem likely. But the only way that for that to happen is if we get that escalation that doesn't really nobody backs down on it, and I think there's a good chance for that to happen. Like seeing what's happening at Davos, basically Ludnik, Bessent, Trump are all in on this stupidity. All Europeans and the Carney's speech are like, America, get the fuck away, we're dumping you. And if this thing continues, I wouldn't be surprised to see like a bear market all the way, all of 2026. Again, not clear if this is going to happen right now, but it is a possibility that would also validate this pattern we see potentially happening in Bitcoin. I think we get basically this part almost for sure, or at least this part until 80k. This one maybe coin flip. If we get this one, it increases obviously, but this prolonged go nowhere cycle that should last until from March all the way until August seems very unlikely unless the market goes nowhere in that time period as well, and that's gonna be very painful to experience if we do get that. So for now, my my expectation is that we will basically do this. Uh, the ribbon will flip. We went below the 55 EMA, which is in purple here, but every time we tested once, twice, third time. So on the third time, that is when we actually broke down and started a new leg down. Right now, we haven't even attempted to retest that. Same thing happened in 2022, not that's 23, 2022. So we went below this one. It was a bit slower, but also got rejected by the ribbon a couple of times. Right now, we haven't really got the chance to be rejected by the ribbon. So also here as well, like we see, we ride the ribbon a couple of times, and then we accelerate down. Right now, we haven't had any type of ribbon retest, and I think that's 100% coming. And whether we go down or not to 6700 first, it's irrelevant. The point is that when we do retest this area here around 6850, that's potentially the short entry, not something else. In my opinion, this is how it's going to play out. I hope it makes sense for you guys. That's it for now. I'll update if things change. Have a good one. Bye bye.